Okay, everybody, we're going to kick it off here, get us started. For those of you who don't know, my name is John Mooney. I'm a partner here with Nisivoccia. Along with me today is also my partners, Lee and Ray Sarinelli Jr. Happy to be here, and more importantly, happy to have you on this Friday before Memorial Day weekend. We have a great attendance today. So happy to see everybody joining us. I want to thank our moderators, Jason Gabloff and John Rheinhardt. They do an incredible job behind the scenes and help us put a lot of this together. We're going to be talking about a wide range of topics today. This is not a canned presentation, so please, if you have any questions that are along the way, feel free to throw up your hand, and John will filter the questions over to us. It's an interactive group. We like the dynamic of it, and no question is a dumb one, so please throw them out there. Don't be afraid to ask. You're not going to slow us down. If you have a question that's important to you, it's important to us. So again, feel free to ask away. And with that, I'm going to turn it over to the moderators, Jason and John.
Okay, a little housekeeping before we get going. There's going to be 4 polling questions during the webinar. This is to allow us to validate that you actually stayed on for the whole webinar so you get credits. You have to answer at least 3 of those 4 in order to get credit. I don't see anybody on by phone, so we don't have to worry about those instructions. There is a raise your hand icon. You can click on that if you want to raise your hand to talk, or if you want to just type in questions, we will read them aloud as we move along. But as John said, we're looking for feedback back and forth. The roundtable is supposed to be an interactive event, not just us speaking to you. And so the areas of discussion we're going to be looking at today is going to start off with virtual auditing. We're then going to move on to some general accounting issues, budgeting in these times, some revenue issues, expense items, couple little purchasing tidbits, and then we're going to end it with some legislative items. And then obviously questions and answers from the group are welcome. So Jason, you want to kick it off?
Sure. So I think the first topic we wanted to get into, and by the way, good morning, everybody, was to talk about virtual auditing, kind of get a sense from partners with Nisivoccia that are on with John and Mon and Ray, just to kind of see how they've been handling things with clients going through the audit process, some of the, the good, the bad, what's working, what's not, and kind of what they're learning from. So John, Mon, Ray, I don't know if one of you want to kind of jump in and just kind of start going through, the use of various technologies that we've seen and you've seen as you've been going through your audit process.
Thanks, Jason. I'll kick it off and get it started, and then Mon and Ray, please feel free to jump in. The first thing I'd like to do is acknowledge our staff in all of this. We've been very successful with the transition of transitional auditing to the virtual auditing. And a lot has to do with our staff and their ability to come up with solutions to problems. It's not just a bunch of partners sitting around the table trying to figure it all out. One of the nice things that we've done as a firm is we have weekly meetings. We meet twice a week with our in-charges, and we meet once a week with the entire staff group. And we open it up for discussion. We let them kick information back to us, what works, what doesn't work. So they've played a huge role in this, and we really employ some very talented people, and we're very proud of that. And we'd like to acknowledge that as we move forward here. Another area in our firm that has been really helpful in all this has been our IT department. They've been outstanding in getting the communication lines open virtually between us and our clients. They've tracked down some issues, they found some efficiencies, and it's a group effort. It truly is. And we really couldn't have done it without those people. And more importantly, we couldn't have done it without our clients, because our clients have to be open-minded to this as well and consider doing things that they haven't done in the past. It's new for all of us, and it's a work in progress, but we are finding some efficiencies as we go forward through this process. And we have been able to be successful in moving our audits along. I have a couple of numbers here that I'll just throw out at you. We have approximately 88 municipal clients. Of the 88, 47 of those clients have either been delivered, out in draft, or the reports are to the partners already for partner review. So we're more than halfway through the process of getting our audits done and delivered, or at least out in draft. There are another 27 that are currently in progress with our staff right now, and there are 14 that haven't been started yet. And that's not uncommon for this time of year for us, but I think it's pretty good. The numbers are showing us it's pretty good, considering all the hurdles and the hoops that we've had to jump through and over. So we're still getting stuff done. And again, the reason is because it's a great effort between our clients, our staff, and ourselves in trying to find ways to get this through. I don't know if Mon or Ray want to go into specifics of how we're getting this accomplished.
Sure. I can, put it in my little 2 cents. And I want to echo, John's appreciation for our staff, our IT department, and certainly our clients for working with us to help us through this new process. And it's certainly been very challenging, on our end as the auditor and our clients. And it's, even though we were able to, as a firm, has that IT infrastructure to work to transition to 100% remote working environment, it's still a big adjustment. And there are things that came up that we didn't even think of. On the client's end, a lot of people have desktops. They might not have that laptop that they can work remotely from home. So when we go into trying to get records from client, asking for records, it's challenging because they are on a staggered schedule. They might come in only 1 day a week because they don't have that access to a laptop, or their accounting software might only be on their on-site server. They don't have backup, or it's not on the cloud, or they can't get remote access into, or VPN access on their server. So those are all kind of some of the challenges we've faced. And to get around that, we have slowly tried to found access to clients' accounting software, whether it's through VPN access, or a lot of clients, our IT department has helped a number of our clients along with their software company in order for us to get access to their system. And that takes, quite a bit of time, but once that initial setup is done, it's usually a smooth transition from then on. And, our clients have been generous enough to say, okay, we get, pull your scope. We can scan in vouchers for you, or giving us access to their system, like I said before, where they might have already scanned in copies of vouchers and invoices, or even box up records for us to pick up from the client site. And we're, very appreciative of that. So we've coming up with different ways with different clients, trying to work through the process. And I know Ray probably has, encountered different things too, if Ray wants to.
Yeah, I just wanted to mention, going along with what you're saying, it seems that getting the financial statements written, the notes to the financial statements written based on the reports that are able to be done electronically has been the smoothest part of this, especially with the way things can be scanned or just directly printed to PDF and uploaded to us through our share file. That's definitely been a smoother transition than doing the audit testing that we need to accomplish. So in areas where we need to look at purchase orders, certain clients do have the capability to scan those or even print them directly to a PDF format. But a lot of people don't have that technology, or obviously don't have the time to do that. So we have transitioned to the virtual audit, but not 100%. There's still a little bit of time invested in getting our scopes pulled, getting that to our clients, and having them manually pull vouchers or bid packages or bank statements and set them aside for us for 3 days. And I guess that's kind of the CDC standard. The virus can only live on paper for 3 days. So we try and have those documents set aside. And again, thanks to our staff, that we do have staff that's willing to come out, collect documents, bring them back to their homes and to work on those things. So that's a part of what we've been doing. So it's not in a sense 100% virtual, but that, you know, there's some things that we're doing. And I saw a question related to, will virtual auditing become the new normal? And I think certain aspects of it will, but for me, I don't know how many of you like seeing me, but I like seeing you. I like being involved with my clients, seeing them. So I think there are certain aspects that we do plan to incorporate into our auditing in the future, where, you know, we do get reports in advance based on uploads and do start writing our financial statements without actually coming out into the field. But for testing, I think you'll always see us. And for certain parts of it, we want to come out and see you and talk to you and get a sense of what's going on in your town or your county, and to understand your issues so that we can be a part of the discussions of, you know, how the audit is going and what issues you're seeing.
And just to piggyback on what Ray was saying, you know, we have a client portal that we set up for our clients, and anything that is sensitive should be sent through the portal. It's secure, it's encrypted, it's much safer than sending it via email. I mean, there are some documents like check registers and expenditure reports, things like that, where you don't mind sending those via email. But when we get into our payroll testing and we're looking at W-2s, and you start to deal with people's social security numbers or even bank numbers, that's the kind of information that we're trying to get everybody to put up onto the portal so that we know it's in the most secure area. One of the things that we do is we have very intense training for us and our staff on you know, spyware, malware, and keeping all that stuff off of our systems. And we find that we do a very good job with that. But even with that, the most safe place is through the portals that we are able to set up. And we do that with our IT department, and they're very instrumental in helping us set that stuff up. You know, one of the things that we haven't mentioned yet is one of the things that's holding us back in the audit process is the municipal courts. It's very difficult to get court information from your courts. They're their own autonomous type group that exists within your municipality that, you know, if it doesn't come from the administrator of courts, if there's no ruling that we can get things electronically, it's something that we're still going to have to come out and perform testing on while we're out in the field. So that's one area of being held up. You know, the vouchers are another area where some clients, they don't have the time during the day to go through and scan 60 vouchers that we're looking to test. So things like that are giving us pause for saying that this is what auditing is going to become, because we still know that there's going to be field work time, and we know that we'll be out there and seeing you for at least a portion of the time. But can I see our hours being reduced for our staff being out in the field and on site? I could. I hesitate to use the terms like new normal, and I'm getting more and more irritated when I hear people say, well, we don't know what the future is going to hold. Well, none of us ever know what the future is going to hold. If we did, I'd have bought Google when it came out in its initial IPO, you know, and I wouldn't be sitting here talking to you. So nobody knew what the future held back then, and nobody knows what it holds now. So things are changing, they're fluid, and we're trying our best to move with that and be as adaptive as possible to it. We're hopeful that the deadlines don't get pushed back, because that pushes back into our school district season. You know, the tax guys in our office, they work very hard for a month or two a year. And, you know, when April 15th is done, they're pretty much done. You know, with us, when municipal work is done, we roll right into school district season. So there's really a very little break for us and little downtime. So the idea is, let's fix it and figure out how we're going to do it now, so that even if the deadline gets pushed back, we're still on target to finish by June 30th and be completely done with municipalities.
And I also want to add that we welcome any feedback or suggestions you have this is new for us, and this is certainly new for a lot of you. So if there, if you can't think of any better ways that we can handle certain processes or getting this, remote auditing done, we certainly welcome any and all feedback.
Yeah, no, I just wanted to add along with that, with any feedback, if you're going through this process and you find something is more efficient, but you have a question on whether it's going to affect your internal controls. For instance, if you end up printing your purchase orders to PDF and doing everything electronically, is it changing your internal controls? We encourage you to reach out to us to make sure, just say, hey, when we were going through the virtual audit, I found that I can do things a certain way or a different way that's a little bit more efficient, but I'm not sure it's affecting my internal controls. We'd be happy to evaluate that with you and make sure that you're still compliant with your internal controls and have good, strong controls, but are being more efficient in the process.
So we have a question that was asked. It says, are there documents that we should be scanning now on a monthly basis for next year's audit?
So I know in one of my clients, they found that, we kept asking for different bank reconciliations as part of our testing. But, handing the bank statement along with the reconciliation and uploading that to us. And so the question was asked, they said, every month when we do our bank reconciliation, should we just scan the bank statement and the reconciliation and keep it in a file or upload it to you? And we said, whatever's more comfortable for you. If you want to keep it in a file till the end of the year, and then when we come in for the audit, you can just upload it to us. That's fine. So, yes, I think there's certain things like a bank reconciliation and a bank statement. If they all go together and you can scan it and upload it to us, that's certainly something that can be done.
And even, a lot of people have online access to their bank anymore, so you should just download your bank statements in a PDF. That will avoid the scanning process. Same thing with your bank rec. If you prepare on Excel, I know there's still some people out there that does their bank rec manually, but if you do it on Excel, you just have to save it on Excel and just send us a whole file at the end of the year.
Yep.
Anything else for our panelists? Okay, then we'll move on. So we'll do polling question number 1. Michaela, if you wouldn't mind posting that. We're getting close. Remember, you need these answered in order to get your credits. We're up to 62 out of 72. Okay, we got 91% in. I think we can end the poll now, but the results are 36%. Actually, you can see it on the screen. 36% have had their audits completed, 64% have not. We can share those results. All right. All right, we'll move on. The next topic there was general accounting. We had a couple questions from our last webinar. One of the questions was, my cash position is already low. What can I do to help with this? I'll throw back to the panelists.
I'll let you guys start it off. Or
Yeah, I think it's very important to not only project your cash going forward, it's also very important to see where your cash was last year so that you have a comparison, you have a base to see if I'm short or not. And it's also very important to talk to all your respective department heads, make sure that they're aware of, I'm sure they're aware of everything that's going on, but the importance of really monitoring your expenses, reviewing all the capital projects that you have planned to see whether that any of them is priority. And if not, maybe you can push them back to reserve some cash. And, talking with your school districts and counties to see if there's any alternative payment schedules that you can work out.
Right, and one of the things that I've noticed is even if you have, if your current fund cash is reducing and you're seeing it diminish, then look to your other funds. We don't have necessarily problems with inter funds as long as they're cleaned up by the end of the year. So if you're seeing a cash drain, but you're cash flush in other accounts that you're not using money in, then by all means, set up the inter fund. But it's also planning, project what you're going to be getting, just like what Mon was saying. Take a look at where your tax revenues are, compare them to where they are last year, and try to project out what you think you're going to be getting in. And if it's just a cash flow lag, then, as we get into the second half of the year, we usually start to see that cash flow trend northward. So as you project each month, or as you're looking at each month, both currently and historically, you'll know if you're in a position where I can borrow money from another fund temporarily and pay it back by year end, or do I need to look at other means like going out for a tax anticipation note? So there are ways to artificially help out your cash flow position, but there's also other things that you can look at when it comes to expenditures. Does this project need to be done in 2020? Can we put a hold on non-essential spending to stop the flow of money going out the door? What can we do to cut back or curtail the expense part of it to help our cash flow out? I don't know if you guys want to get into discussing with school boards and county.
Actually, before you move on, I just had a question. So, John, what's the harm if I know that my cash is going to be down? I leave those inter funds open at the end of the year because I know I'm going to catch up in tax collections the next year when I do my tax sale. We get a slap on the wrist and a comment.
Well, you're going to have an account. You'll be having an inter fund payable, and as you have an inter fund payable sitting on your balance sheet of the current fund, it's going to negatively impact your fund balance for the year, being that you borrowed money and you haven't paid it back. So it is a hit to fund balance. It'll help you out with your cash flow, but you are going to see an impact, a ripple effect through your financial statements. So whatever you. Oh well.
No, it's only
I apologize. Right? I'm thinking of it the other way. I apologize. Yeah, it's just going to sit as an inter fund payable, and it'll be on your balance sheet. And again, your cash will be up, but you'll have a liability for the inter fund payable, and you'll see, so it'll throw off your cash position and your surplus at year end, because you're going to have that liability that you do need to pay back. I caught that as I was going.
So I correct everybody else. It's not surplus. It's fund balance. I just had to keep it up.
Thanks, John. I appreciate it.
That's what I'm here for. Anybody else want to weigh in?
I just wanted to talk a little bit about the, certain towns have moved their, extended the grace period to June 1st. And I think if you did that, you have to take that into account on your cash flow. So start having an open dialogue with your tax collector and your utility collectors in certain cases on where cash flow is at compared to last year. Are we really behind, or is it really just a matter of, well, we're going to catch up in a few weeks when this comes due and people really start feeling the pressure of the deadline come June 1st. So, I think for certain towns who decided to move that grace period forward, you might be seeing a lag right now, but hopefully we'll catch up in the next few weeks. So I think it's definitely important to have an open dialogue with your tax collector and see how tax collections look and what they're projecting for.
Yeah, one of the things I've noticed, I do a lot of municipalities in Warren County, some into Morris County, the people I've followed up with at this point, their tax collection percentage hasn't really changed all that much. They were pleasantly surprised because we were concerned that they would see start to see an effect of a downturn in their tax revenue. But of the clients that I've been in touch with, everything is showing that they're pretty consistent with where they were last year. In fact, one municipality who had a little bit of a downturn last year, they're actually seeing collection percentage up already this year. So, we're going through, and it's a town-by-town basis, but you should be looking at that. You should be seeing where your benchmarks were, and if you're falling short of them or if you're consistent with where they were in prior years. That'll tell you if you're going to if you'll still have that deficit issue in cash as the year goes forward.
Right. We have some people that were commenting on the chat that their collections have been up over last year. I know ours here in Wharton is about the same, if not a little up. We do have another question now. It says, can you anticipate the interfund receivable in the following year's budget?
You can, but if you're sending money over to the current fund, I saw it backwards in my mind's eye. If you bring in money into current fund, it's not a receivable. It's going to be a payable, so you can't do much with that. But if you do sit on a current year receivable, interfund receivable in the current fund, you can anticipate up to the amount of cash that they have in that other fund. So let's say that federal and state grant fund owes you $100,000. If the federal and state grant fund has a bank account with $50,000 in, you can anticipate that $50,000 in next year's budget. It won't help you with recouping your surplus at the end of next year because you've already used that money in your next year's budget. So you don't get the double benefit of lapsing it back or returning it and increasing surplus, but you will have the benefit of putting it in your budget and help balance your budget if you have budgetary constraints with revenue.
Okay.
All right.
Anyone else?
Did we discuss anything with school?
Not yet. I know that another one, Mike Garino had put up there that, don't panic, figure out really where your shortfall is going to occur. And if you need to react to it, it might be a short-term deficit, but it might return itself. Like we know if you're not an accelerated tax sale, the tax monies are going to pick up in the following year when you do your tax sale. The other one is to work closely with all your collectors, your tax and utility collectors, to figure out the timing, what they're seeing, and any feedback. We're going to do a push for some delinquent notices. Not that we're seeing any decrease, but we're going to keep the push on just to keep the money coming in.
Mm-hmm.
Yeah, we were kind of going through that same thing, not necessarily to make any changes yet as the towns I'm in, our collections are right on where they've been. So we're going to continue the process and that we would normally go through with getting out delinquent notices and just kind of, keep an eye on third quarter. We're trying to get a handle on a couple of our bigger taxpayers. If you have a town with a few large commercial properties that are a big part of your tax base, probably not a bad idea to stay in touch with them. In Millburn, we have the Short Hills Mall, so that's our biggest taxpayer. They're obviously closed right now, so we're trying to figure out exactly what position they're in for the third quarter, because that's a huge part of our cash flow.
And I know not all towns offer online payments. So that might be an area you want to consider to offer online, tax payments, utility payment too. It's easy for a lot of people now because everything is electronic, rather than having to come to the town hall and paying cash or check. So that might encourage them to pay.
So John, you had started to talk about schools in the county?
Yeah, it's just if you have a relationship with your school districts, a good relationship with a school district or a regional school district, if they're not seeing the same outflows of expenses as they have been in the past, maybe there's something that maybe they wouldn't, it would be all right to push back a payment or pay a partial payment, get on some kind unique payment plan, something different than what's already been established if you're finding yourself low on cash. So that you don't have to come up with the full boat of money. You can come up with half now, half later. As your year gets better, you make them whole. But again, it's all about relationships. I know some places have great relationships with their regional school and not so good with their local school, some vice versa. So that's more of a personal kind of thing. If you're comfortable reaching out to them and seeing what can be worked out, maybe they can help defer some of those payments to a later time.
I know here in Morris County, our county administrator had reached out to all the administrators and said, hey, look, if you need help, let's talk. It wasn't a blanket, condoning of it, but just said if there's a need. I know Betty Bauer's on this call as well, which I'm sure she was thrilled with the thought of loss of revenue for a period of time, but that's there. I know we work with our local schools. I hadn't tried with the regional, but we also didn't have a need, so it wasn't worth making that effort at this time.
Right. And, the other thing is keep everybody in the loop. Keep your auditors in the loop. Get us involved. If we're not your auditors, get your other auditors involved. Pick our brains for some ideas. Let's take a look and see if you want to show us where you're at and how you got there and just a quick review. It's part of what we do. So it never helps to have that extra set of eyes looking at it and, another brain to pick when the chips are down. So.
All right, so I think then kind of just follows up on, the cash position, and really next piece of it is we're all looking and watching our revenues right now, and a lot of us are anticipating that we're going to end up with some shortfalls in revenues and some anticipating that we're going to have deficits due to the whole COVID-19 situation. So we wanted to go through, and it got into some interesting discussions as we went through this as a group yesterday, but just kind of talking about what are some of the strategies and some of the thoughts that the auditors have, and John, I'll even have you jump in if you want on this, to kind of go through and how we can help at least reduce, if not get rid of, some of those anticipated deficits. So I don't know if Mon or Ray, John, and John, which one of you want to kind of jump in and go with that?
I'll just talk a little bit about what we first discussed yesterday, and that was, if your revenues aren't going to come in where you think they are, and you think you might be close to running a deficit, you could always cancel some appropriations. I know in talking to a lot of my CFOs that there was light storm recovery and snow removal this year because we had a little bit less of a harsh winter. And also there could be some areas where you're experiencing some savings because you're not operating at full capacity. You're not operating on a full scale basis. There's partial closures in a lot of towns. So there might be some areas of savings where you can offset the losses of your revenue with some savings that you've seen in some of your appropriations. The only caveat that we came up with that is to have a discussion with us. There could be some levy cap implications on what appropriations you do cancel. So we want to make sure that if that's a road that we want to go down, you're canceling from the right appropriations to make sure that it doesn't affect your levy cap moving forward.
Other areas that you
looking at all the.
Oh, sorry. Go ahead.
You go, Mon. Nope, go up. I'll try at the end.
Okay. No, so I was just going to say that other areas that you can look at is some of your reserves. If you have tax premiums, review those. Anything that's older than 5 years, you can cancel it to current fund. Same thing with trust reserves. Review your trust reserve. I mean, we do plenty of towns, obviously, but there's a lot of old trust reserves that some CFO don't even know what those reserves were set up originally for. So review those reserves carefully, see if you can cancel them, especially with developers escrow. There might be money in there that's not allocated to any developer or contractor. So I would suggest looking at those. And in the current fund or grant fund, wherever you have grants, look at your grant reserves. That's not off, doesn't have an offsetting receivable, and see if any of those can be canceled. So what John was going to say before, sorry.
Actually, we have a question from Elke Yetter. Says, has the GFOA board received any feedback related to the DLGS allowing a 3-year average for the 2021 budgeted revenues? We have a working group that's been working with them. That kind of stalled for a while now because they've been caught up in trying to deal with the pandemic and all the other things that they're responding to. But there was an openness to allow something to that effect, but it has not been formalized yet. The question I was going to ask before, or statement, is, originally here in Wharton, we were looking to stall our budget introduction adoption as long as we could to figure out the full impact of this COVID event. But if you want to think about your revenue anticipation from a strategic standpoint, the bigger your loss, if this legislation is passed, the bigger amount that your town's going to end up with. And we'll talk about some of the legislation at the end. It's a little bit of a gaming the system, but if you think about how to maximize what you're going to get, you're following the old rules. Another question came from Bill is, I'm assuming that's Bill Homa, but there's no last name. Should we be looking at canceling funded improvement authorizations for projects that have been completed?
You should. My simple answer to that is you should always be looking to do that. Send the money back to its original funding source so that you have the maximum use of what those dollars could be. Even if there's debt associated with it and you're canceling the rest of it, reserve to pay debt service, bring that money into next year's budget and pay down a little more debt on it. So always a good thing. As accountants, I think, I always want things as clean as possible. I don't always perfection, but because it's not really attainable in all cases. But anytime you have a chance to clean something up, go for it.
And we got a response.
Just going back to avoiding deficits.
John froze on us.
Am I good?
Yeah. Now you're good.
Okay. I don't know where I froze, so I'll just go back to what I was saying. We were talking about avoiding deficits. One of the things that, I notice it out in Warren County a lot. I notice it in Bergen County, very little in between, but the use of deferred school tax. There are some towns that are at the max and can't really do a whole lot with it. But if you're a town that has an ample amount of deferred school tax available to you, that will help you avoid a deficit in any given year as well. There are some towns that we have that we like to protect that, and we don't tap into that. We don't feel the need for it because, in my opinion, it's an artificial inflator of fund balance, not surplus, fund balance. And, we don't want towns using that unless it's raining. And it could be raining by the end of the year. So if that's an option for you with your town and you haven't hit that 50% deferral limit, this will be another area where you can go in to avoid having any kind of deficit in fund balance this year.
Okay.
And if just following up with that, just one more thing, John. If you show a deficit and get called down to the state to discuss your deficit, the first thing they're going to ask you is, do you have deferred school tax? And is it at 50% anyway? And then they're going to tell you to go get out of here and go take care, do that and get rid of your deficit. So be proactive.
And I might have missed one. Did anybody talk about tax sale premiums?
Yes.
I mentioned that. Mm-hmm.
Okay, good. Sorry, Mon, I must have zoned out.
No, that's fine.
Jason, you want to take the next one?
Sure. So one of the things that we had been discussing, and I know a few others have kind of been looking at different ways to pay vendors. A lot of us have been getting emails from vendors who aren't in their offices right now, whether it's attorneys or auditors or professionals or just other places. So Some of the things that we've been looking at, and our software vendors have the ability, at least most of them do, to essentially pay your vendors through ACH, so that you're not sending checks that could be sitting in a lockbox or somebody's mailbox for, what's now 8 weeks. So this is definitely a good option, and there's a few different ways to go about it. P cards can be helpful if you have a QPA. It's something you might want to look at least. There's a platform there with controls that are already in place in a local finance notice to follow and get that set up, and that at least allows you to get what you need in times of an emergency and continue to have your vendors paid. But the ACH option is interesting. The big thing that I've kind of learned is make sure you speak with both your bank. Obviously, you're going to have to do that because it works just like your payroll direct deposit. It's the same type of file. But also make sure the vendors in the bank, your software vendor and the bank is talking, because there's 2 different types of ACH payment files. And without getting way into the weeds, one of them has to do with paying funds directly to an individual versus a business. It's 2 different files, and they have 2 very different meanings in the banking world. So a bank may not process a certain type of file if it doesn't meet their standards coming out of the software. That's been one of the things I've kind of learned going through this process over the last couple of weeks, and it slowed us up a little bit. But I think the ACH option, you can just follow your regular bills list protocol. Your process doesn't have to change. You still process purchase orders the same way. Bills get approved through the same cycle that it goes to your counsel on the bills list. But essentially you have 2 different files. You'll have a live check file, and those get mailed out. And then once everything's approved, you can then upload a file directly to your bank for them to send out, just like your payroll direct deposit. So there's some good options for all of us that are working offsite and have the capabilities to maybe still get to your desktop through the servers or VPNs.
I have to tell you, it's a good thing that Bill Homa is muted, because he is firing out questions nonstop. His first question, or I think it was more of a statement, is the requirements of audit discourages deferring school taxes.
Well, I discourage municipalities using deferred school tax, going back to that, but I'm not going to let my town sink either. It is a silver bullet that we have, and it may be discouraged and it may be looked down upon, but it's a viable option to keep them out of a deficit if that's what it takes. So, sometimes you got to lay all the cards out on the table and play your best hand. And if that factors in, well, I'm not going to leave it, sitting on the sidelines. I'm going to use it if it's our only option. So I don't want towns using that as a slush fund to go out and pave roads or buy equipment or do whatever they want with it. I think it should be held and maintained for a time of need, and some towns could be in that position this year. So
Jason, this is a question from Bill saying, what are the costs associated with doing the ACH processing?
So it's a good question. And the ACH processing, the fees are similar to what you'd be paying for the processing of your direct deposit, the ACH. So it's not super expensive. It's going to depend on your relationship with your bank. I don't want to talk to other people's banking relationships. Our bank's been pretty good with working with us on those fees. I see your next question, Bill. From time to time, we're asked to provide a canceled check. How do we provide proof of payment similar, with an ACH? So that's a good question. Since I haven't gotten there yet and we're not quite doing it, I think there's reporting in your system that would allow you to show that. And then your bank, part of the whole thing is making sure that you are able to get reporting back and forth between yourself and your bank and your software. So that is a good question. Actually, I'll have to go back and ask that. That's one of those checklist items that I'll have to go back to. So I'll let you know, Bill, once I kind of get through that. I know that's not a great answer.
Next two questions can kind of be grouped together. The one's coming from Joe Kunz, who's saying that the LFN 2018-13 sets the ACH regulations, and they're not simple. And then the next one is from Christine Roloff, says, what is the auditor's opinion on ACH payments? She says, if I recall, the LFN had very specific procedures for ACH payments regarding checks and balances. This municipality had to not opt for that due to the internal controls and the number of employees that they have. I don't know if anybody wants to touch that one.
Yeah, I don't know if the auditors want to get into it. Yeah, the process is not necessarily simple. It does take a little while to kind of navigate through the regs that were put in the local finance notice. But I would definitely, obviously, I'm not going to tell you not to follow a local finance notice. I think that the point that we're at is trying to come up with different ways to do business right now and things that we can also use going forward. So we are looking at the regs to make sure that we're going to follow and put those things in place.
I think from
next question is coming from.
Hey, Ray. Go ahead, Ray. Or is that John?
It's Ray. From an auditor's perspective, I could see what Christine was saying. It's a town by town basis. If you're not comfortable, or even your officials aren't comfortable with the controls that you can put in place for an ACH type system, especially in a smaller town, then it's something you shouldn't do. You know, if it's just too cumbersome of a process and it's not going to create efficiency, it's just going to create issues with internal controls. It just might not be the right process for you, which is unfortunate. But so I think it's something that needs to be evaluated on a town by town basis, and whether and of course, you know, we would obviously step in and help with those issues and try and help you figure out the internal controls and go through the LFN with you. But yes, I've read through the LFN. It is a very specific set of requirements, and I think if you can set up the internal controls and you do have the capabilities to do it, it can work. But it is something that you're not going to just want to get up one day and say, I think we're going to do ACHs today. You know, I think it's something that you know, you should work with, you know, your entire department, your governing body, and your auditor to make sure that the processes you have in place are capable for, you know, having good internal controls over the ACH process.
So yeah, and we'll go to the next question, but I think, Ray, that's a very good point, that there's just, I've been looking at it as you have to kind of figure out what's going to work for you. Right now, not everything's going to work for everybody, and don't do stuff that you're not comfortable with. You should never go down those paths. I've slowed a couple things down with regards to this right now because of the control issues, and I just need to make sure everything, you know, lines up correctly.
Right.
Yeah, I have an anonymous comment that says, yes, the deferred school tax is discouraged. Same for interfunds, and even more for commingling funds by closing all those other accounts. It says, however, don't let the rules get in the way of good business. Thought that was funny. The next question comes from Fabiana. She says, with regards to ACH, what are you doing to prevent fraud? Do you have any processes in place to verify the vendor bank change information? Interestingly enough, I was on a webinar for GFOA National yesterday. I think Jason was on that same one. It talked about fraud. And one of the panelists said that, you know, their transparency by putting up their bill list and everything they do about what they pay, they're extremely transparent. But the people that are taking advantage of that are looking at who gets the biggest payments, who has the biggest frequency. They're sending in account update information in hopes that nobody verifies that comes in. And one of the things that we do here in Wharton is if somebody requests an update to their vendor address or payment, we call the original vendor on file to make sure that is true and what they want done. But there's all kinds of fraud going on and people taking advantage of that.
So I think in terms of the ACH, there's a couple different things similar to how you would handle a payroll direct deposit. If somebody comes in and gives you a new bank account, there is a pre-note that you can send to make sure it's legit. So there's that part of the process. then, you know, just as John was saying, if you're getting emails to say, hey, we want to be paid by ACH or some other form other than a check right now, just like any other email that can be fraudulent, before you go and do anything, one of the processes that we're putting in place is a phone call back to the vendor to make sure that it was actually them requesting it, and so that we can verify the actual account numbers and the routing numbers, because that's your worst case scenario, right? Is you just all of a sudden send money to somebody else, and now you have a bigger problem on your hands. So you have to make sure you continue to do those verifications when you're getting, even if it's a phone call. If you have a contact with a vendor, and that's not the person you regularly talk to, maybe say, you know what, thanks, we'll take it, but then you just pick up the phone and call the person that you would usually deal with, just to make sure.
And we had sent out to our clients an email blast about electronic payment of bills, and referenced in there that the finance notice provides additional guidance on the policies and procedures, including the officers and employees who are responsible for assuring adequate controls are in place and being adhered to. So, and also who can initiate and authorize the electronic transfer of funds. So I would refer you, if you have that, refer back to that email, but also, you know, there's some good guidance in that local finance notice as well.
Yeah. And I'll just add in, this is something completely new for me. I'm not very big personally on using some of these ACH modes of just paying bills, and I'm still a little bit conservative. So I get a little bit nervous and kind of a little twitchy when we start talking about electronic payments, but, you know, and just because of some of the fraud that can happen. So you just have to make sure, as Ray just said, make sure you put all the regs in place. And I see Jerry Sineski putting with a comment in the Q&A. Keep it simple. Controls should already be in place. The elephant says to document them. Keep it simple, but I think, Jerry, also make sure that you're smart about it and comfortable doing doing whatever you're going to be doing right now to ensure the security of the town. And then the last question we have on this, John DeJoseph, do any towns use AP vendors such as Paymodex? I'm the wrong person to answer that because I'm really not familiar with it. I don't know if any of the other panelists have any sense of how those vendors work.
I haven't looked at it yet.
No.
Anybody, any of the attendees want to chime in? You can post this Q&A or raise your hand if you'd like to discuss it. I'm surprised Jerry didn't raise his hand. It's good having him muted.
Yeah. And
so one of the other things, if we're waiting for somebody to raise their hand, is another area of fraud has been payroll lately, where towns will receive an email which appears to be an employee asking to update some information in their direct deposit. I know there's a couple towns that have been hit with that fraud and made those payments without doing a check. I know here in Wharton, if somebody requests any update that's not either done self-administered through our portal, and they do it from a different access point, they're required to come into the office to the payroll department and give that authorization. It's just another check. It's making sure that's truly what they want to have happen.
Yeah, we actually go through a similar thing with payroll, John, in Millburn. If I get an email from an employee and it's not from their Millburn address, because then we don't necessarily know who it's coming from, we'll actually call the department and say, hey, is this email legit? And I need them to either come in or put the request in through the portal or through their actual Millburn address so that we can do a little bit more verification. And there was one comment, actually, I'll read on the ACH from Joe Kovalchik. Just vendor, you guys all probably saw it, to making sure that also your vendors have proper encryption set up to mitigate fraud. You know, so the vendors have to also make sure that they're in a position to accept your payments and that you should be comfortable with what's happening on the other side.
Jason, I think he was referring to your finance system, your accounting vendor.
I thought he was going the other way, but that's okay. Either way, you have to make sure that the files are encrypted.
Absolutely.
Okay.
Oh, I got somebody that thinks I'm not speaking loud enough. Sorry, Monica.
Question.
I'll try.
Okay. Okay.
All right. So when we were preparing for this, we talked about, control of banking relationship. Is there any way to enhance what you're doing to increase security? And it's another area that you can look at. And then the other item that came up is, will your governing body look at thresholds for allowing payment without approval? Setting a minimum amount that you can pay up to that amount without having to go through a formal bills list to increase that process. And it helped with the prompt payment requirements that we're paying within that certain time frame without getting hit with interest. Anybody else?
There's a couple questions that popped up, John.
So, Elke, local units that have ACH payments or receipts might want to consider having a separate account for this so it is not combined with the main account. It's a good point. Just one more insulation. The other one came from Sue Hodgkins. Says, does anyone use P cards, and if so, have there been any problems? Anybody have any problems? And if any of the attendees want to chime in again, you can just raise your hand and we can allow you to talk. So we're not seeing any right now. If that comes up, we will come back to that one. So at this point, we'll do polling question number 2. We need a couple more people. We're almost there. We're at 85%. Last time we got to 90-something%. Remember, this is how you get your credits. Also proves that you're awake. So the GFOA National is doing the polling questions during theirs. I'm going to stall a little bit till we get everybody in. We're up to 90%. And some of them are sneaky polling questions. It's not announced. It's you're sitting there, all of a sudden the polling question comes up and you might not see it. So it really proves that you're awake. All right, we're up to 91%, 60, 92%. So let's share the results. So we have 20% said yes and 80% said no. Okay. We're going to move on then. Next area is budget. One of the questions we got is, I've already adopted my budget. I'm concerned about how to manage my operations to avoid a deficit. Are there any suggestions?
Well, I think some of this is going to be rehashed of what we were discussing earlier, especially when it comes to canceling appropriations. There are certain areas of budgeted revenue. If you already have a budget in place and you're concerned with either construction fees or court revenue coming in a lot lower than what you have anticipated, there's going to be some movement and some things that you might have to do before the end of the year. And the biggest one obviously would be taking a look at your expenditures and again, spending money on essential items, looking to cancel certain line items prior to the end of the year. Everybody here knows the budget's a 2-year cycle. So you're either going to get the benefit when it lapses next year, or you can do it early, cancel it, and avoid any kind of deficit situation for the current year. I don't know if Mon and Ray want to pick up from there.
Yeah, like John said, some of the, I've made some suggestions before when we were talking earlier about, operating deficits or shortfall in revenue. But I think it's important to keep your line of communication open with all your department heads and making sure that everybody's aware of the importance of really monitoring the expenditures on the department level and also on the overall level, and prioritizing what's important, what's necessary, absolutely necessary to be purchasing right now versus being deferred into next year or the following year, and reviewing all your capital purchases the same way, prioritizing them.
Anybody else? Actually, Jonathan DeJoseph just put up another one. Are towns using positive pay as a control? This is going back to the prior one. I know we are here in Wharton. We rely on that. Not that we look forward to those exception emails, but they come in all the time. But I think that's an important part of the process to ensure or prevent some bank fraud. We actually went to only allowing checks to be issued out of one account. We created a central disbursement account, which is a clearing account. That no other accounts can have that, and we absolutely use positive pay on that central account. Next question came in from Bill Home again. What do you foresee as far as the state aid to municipalities? Bill, I could go on this one for hours. You've probably all heard me talk about state aid and how the state bastardized our revenue, which was our local revenue, and then turned around and called it state aid when it's really not aid. It's your local energy tax receipts. They've stolen it before. I don't want to say they're going to steal it again. I'd rather knock on wood and hope they're going to keep it. But they did do a tentative certification, but they had a whole lot of qualifiers on that certification that we won't know the answer until they do their own budget. So that was that.
Hey, John,
I
know you've got your finger on the pulse of a lot of things that are going on legislatively. I know when they put a freeze on like the homestead rebate, is there anything that they're doing, anything that you've heard of how, I know it's a freeze, but is there any indication that we're eventually going to get that money? If we're going to put it down as a receivable, if we're just not going to get it, what's the grumblings on stuff like that? Have you heard anything?
I think the state right now is scrambling to just take care of their own issues. That's a crapshoot as to whether or not they're going to be able to dig out of that one.
Okay.
We do have somebody who's got their hand up. I can just find them. It's Mike Garino. Do we want to allow him to talk? Let me just unmute him. Mike, you're unmuted.
All right, excuse the outside noise because I am outside, but we usually have a discussion at year end, actually year beginning with Ray from Nisivoccia to discuss the planning for the budget for the year. Now's a good time to discuss with them as well because things have changed. So keep that in mind, and yes, they may have other ideas like you guys, and we're all doing this now, discussing a lot of different things. And each community is different, so it can be very honed in from what the auditor's perspective is. That's all I have, John.
Hey Mike, and that's funny because that's a conversation we were having yesterday is a lot of the things that we're going through and talking about. We should all be making sure you're checking in with whoever your audit partner is, just to make sure everybody's on the same page, and that their strategy is being put forth to not get you into any deeper problems.
So we have another question from Bill Homa. If they do cut state aid, would the increase be to the amount to be raised by taxation? Bill, I think you probably remember back when McGreevy was governor and they were forcing everybody, compelling you to introduce your budget, and that if you didn't, you were going to be faced with fines. And then after they did that, they then took control of our destiny and they increased the state aid, reduced our taxes so that they could say that they reduced everybody's taxes. So until your budget is finally certified, they control your destiny. So the answer is we don't know yet. We'll see what they do. Anybody else? No, there's another question. No, he said thanks. It's not a question. So one of the other comments I have is, a lot of us have already canceled our summer programs. Any seasonal employees that we would have normally hired, they're not going to happen. So if you're looking for low-hanging fruit on some cancellations to control your budget destiny, those are ones that you normally would have expended. I don't want to call it free money, but it's money that you can use to mitigate some of those losses if you have them. Does anybody want to talk about the use of emergency appropriations and the impact on the budget?
I guess I could just touch on it real quick. I guess it's more so not to avoid a deficit, but if you find yourself with expenses that are running out of control, you could always issue an emergency appropriation and then issue a refunding ordinance to fund that expense. So there are steps to mitigate some cases where expenses do get out of control. For the most part, I haven't heard of any towns. I know the counties are experiencing more of an expense-related scenario. But if your town does find that there are expenses that are getting out of control and can't be covered, you can issue an emergency and then always issue debt to fund that emergency. Fortunately, that's also a levy cap exception in the following year. So from an expense side, which I don't think a lot of towns are experiencing, there are some areas that, the issuing of an emergency and then funding it with debt is a way to kind of step in and help with cost overruns.
Okay. The next question we had from the last session was about the state budget workbook and what has been everyone's experience. We had to type a lot this year if you had to do your own, and what's going to happen next year. I know that Mon tends to be the fast guru from the firm. I don't know if you want to address these questions.
Yeah, I'm happy that the state finally, come to the census and switch to a format that we're all familiar with, that has been working for us for years, which is an Excel format. It sucks that they, force everybody to enter the 2019 budget by, I don't even remember now, January something. And then, came out afterwards, a couple months later saying, hey, never mind, we're going to do it this way. So it was unfortunate that we all spent all that time and effort on entering all those data into FAST, and then it was all, kind of wasted time. But like I said, I'm happy that they switched back to the Excel format that everybody's are familiar with. I don't know how everybody's experience was with Excel, but I certainly think that it was, other than the initial, kinks that they had to work out, I didn't think overall it was bad. Obviously, there are extra sheets in there that is normally not in the budget document, all those, tax summary, the budget summary. There's a lot more linking put in. I initially assumed, because the state made it sound like everything's going to be linked. When we went in, the budget ad and some of the budget summary weren't linking properly. Here and there that we have to fix overall, but it wasn't, but the overall process I didn't think was that bad. And I didn't really get too many questions about just the functionality of the Excel overall, to be honest. So I don't know how everybody's experience was with if they inputted their own budget. But the fortunate thing was that you can copy and paste, right? You don't have to retype everything. You can, if you have your budget on an old Excel document, you can just copy and paste in. But depending on how you paste, sometimes it just, there's a lot of errors on, I don't know, the error message pops up and you can accidentally screw up certain things if you paste it the wrong way. But other than that, I thought it was okay.
Mon, I'm going to echo your sentiments there about the budget. I remember being up and sending my last email out at 2:30 in the morning that deadline day to get 2019 budget information into the last of my clients that asked me to do it around 8 o'clock that night. So, all the blood, sweat, and tears that we put into making sure we were all compliant was all for naught in the end. And that I never had a good feeling about FAST anyway. I thought that the portal that was on the old system, with it being web-based, was just completely out of touch with how everybody was used to doing it and how it flowed. As well as I do, in our office, we had to do the old format in Excel and then turn around and go on to FAST and put like the AFS into FAST from the old Excel format. I mean, it was just so redundant, and you couldn't do it. It would have taken so much more time to do one in FAST than to do one outside of FAST and just bring it in. So I'm glad that they've moved on from it. And, the documents that we're using now are much more consistent with what we know how to do and what we've done for years. So I'm happy in that regard. It was a lot more typing this year because obviously it's first year, we have to get everything in. I didn't mind that so much because it allowed me to make sure that everything was in the right spot. And when I look back at last year's budgets, sometimes there was an account number that was off, or, something was in the wrong category or under the wrong category. So it gave me the ability to hit the reset button and fix everything. So I liked it for that reason. Going forward, what I'm concerned about is what's next year's going to look like. Are they going to be able to give me my client's budget next year with everything typed in already? I just have to go in and update the numbers. So I guess my concern more than anything is, where are we going to stand going forward? Because I don't want to have to type the whole thing in year after year after year. And until I know that there's 1 year where, I see it in action, I'll be a lot happier. But I've been happy with the way it's gone this year. And, the instructions are pretty clear. So once all the other stuff is cleaned up, any linking errors, and kudos to the state. I don't say it that often because I don't mean it, but I actually mean it, and I'm saying it now. I think they've done a good job. They released the budget document, and then they pumped the brakes on it because a lot of people were saying we had problems. So they said, all right, nobody do anything. Let's shut it down. And then a couple of days later, it was re-released and put back up there with a lot of corrections. So I give them a lot of credit for that. But I can't give them credit for the old FAST versions. So just my 2 cents.
Yeah, and they were
we've been
pretty...
having our...
Sorry, John. Go ahead.
Just going to interject for just a second. Just while we've been having our webinar, the governor was presenting his budget live and started a new battle by calling the Senate president closed-minded. So this should be good. We should grab some popcorn and a beer and just watch the next fight.
Is there any way we can pull that up on your screen and share it while we... we'll sit back and keep our mouths shut.
So we
have a bunch of questions that have queued up. Are you going to take those, Jason?
I'll take the first one. So the first one, and Bill, this is a huge issue for a lot of us that have municipal pools, whether they're a utility or not a utility. So what should a municipality with a swimming pool utility that will not open? The pool must be open, but not necessarily to residents. So costs are incurred and the utility is faced with debt service payments, etc. So I don't, it's interesting because I don't know how to answer it. I'm in a town, in 2 towns, one that has a pool utility, one where the pool is just run through the general budget, but the issue becomes the same. You're going to have, most likely, depending on if and when we can get pools open, you're going to have a revenue loss. There's almost no way around that. There are certain things that we're going to face. We may not have to hire lifeguards and some of those other things and some of the other staff. So hopefully the reduced expenses reduce the deficit that we're going to see. I know in Millburn, we're making plans to try and get the pool open at some point, but we really have no idea when that's going to happen. So I see an answer there from Gabby. Anticipate the deficit in your operating budget if you can. That may be what we may have to do with, and it's not just going to be pool utilities. We're seeing this in Millburn with our parking utility. Nobody's parking in downtown because nobody can shop right now. So we're kind of in the same boat, and we're trying to figure out and it could end up being that we have to anticipate deficits in the operating budget. I'm not sure it's a great answer, but I think it's going to be interesting. Go ahead, John.
Mike Carino's raised his hand. Allow him to just talk a little bit.
Go ahead.
Working on it. Mike, you're on mute.
Wait a minute. There it goes. About the new Excel system in FAST, I think John Mooney was correct, but he was also so happy that it ended. That's why Excel seems so great. But on the other side, my thought process was I put my stuff in. If their summary sheets didn't work, heck with it. That's their problem. I'm done correcting. I have done so much with FAST with them that I just put my stuff in and I made sure it was all correct. And the summation sheets, and they're all adjustment sheets. I said, that's your problem. You deal with it. So, and I sent it in. And I have never heard any, granted, I wasn't a review year, but haven't heard any rebuttal that it was wrong or it needed to be corrected. So that's all I have.
Mike, I agree with you. It could be my enthusiasm for getting out of the old FAST system is why I'm more of a fan of this one. I will tell you that, it wasn't difficult, and I said that earlier, but that's not to mean that it's not time consuming. So, these things ate up a bunch of time having to re-enter everything in, especially when you had to sit there and, on one screen you got all the codes, and then on the other screen you got the budget going on. So it took a lot of legwork to get these things done, but it's a much easier process than the old FAST system, but just as time consuming. And we're hoping, again, I said it earlier, I hope it changes next year because I hope everything populates as it comes over and it won't be as bad. But until then, we don't know what we're going to get.
The nice thing about this was you would actually be able to backtrack it to where the link was not working. So that was a big plus in doing this whole process again.
So one of the questions that we also got as a result of the last roundtable was, has anybody been able to break open the state budget document so that they can actually link it and use some of the information and fix those problems? I'm getting closer. I've been able to break everything before this one, and I am almost there. I just got to find a new code to make it work. And then to Mike Garino's point, and Mike, I'm going to move you back out. We do a rolling assessment or assessment maintenance program where we inspect 20% of our town every year and adjust market values based upon that. The state budget document does not account for those assessments changing, so my average residential impact is wrong, whether it was using the user-friendly budget or the new state budget document. And to Mike's point, I don't care, it's the state's problem. They show that all of my residents' taxes are going down. So we're going to stick with it.
So next group of questions, the next three really were, well, two, we're really dealing with, I think, some of the issues in we're entering different pieces into the Excel document. Yeah, there are some issues on the RUT schedule with estimating the levy in school and county portions. And then the same, I had the same issue in this one, that the budget did not carry, budget didn't carry over to the budget advertisement. I think that was one of the ones they finally fixed. And I think those fixes will be coming as they continue to hear from us on those items. So I don't know if anybody knows anything about this. John, you may, or what should we be doing with the refuse collection district budget that is not in the state's Excel format? I don't know if anybody knows an answer to that.
That's the first I'm seeing that question.
What was
Nope,
the
actually, I have the same thing. It's a special district. So you're supposed to use the form on the state's website, Bill. It's not automated. It's not fast. It's just their old goofy form. That's what you're supposed to use.
Done the same way you've always done it.
Yep. Jason,
So
you want this one from Fabiano?
Yeah, I'll take this one. Actually, we were going to get to that towards the end.
Yeah, do we want to hold off until we get to that?
Sure.
Sure. We'll get back to you on that.
Fabiano, we'll leave you on hold. So Bill's next question is, how will the deficit in operations affect the municipality's bond rating?
Anybody want to start there? You want to go, Ray?
I think it will, it has the potential to affect your bond rating. I think when a rating agency looks at a municipality or a county, they look at a large number of things. So, depending on how this affects, and how large of a deficit you run and how it will affect your ability to repay debt is something that they will look at. I think, given the extreme circumstances that we're in and how quickly I believe we'll rebound out of this, I would hope for most municipalities. I don't think it'll have such a catastrophic effect on your rating. It's certainly something that your rating agency is going to want to discuss with you and have a plan for it. But I think as long as it doesn't affect your long-term budgeting and doesn't affect your ability to pay back your debt, I don't see it causing a rating decrease or something like that. It could potentially maybe change them from a positive to a negative outlook or something along those lines. But I think they take into account a large number of things. So it definitely is something that they will look at. But depending on how well prepared you are, where a whole number of other factors of how well prepared you are to deal with this and to move forward, will come into account on that.
I tend to agree with you, Ray. I think that, when we get on these bond rating agency calls to go over what the state of the town is, our mantra is always to accentuate the positive, try to push the conversation and keep it positive or push it to a positive direction. Everybody, well, not everybody, but there's going to be a lot of municipalities that are going to be in a similar situation. And I got to think that whether you're S&Ps or you're Moody's, you're going to be able to take that into consideration for what it is. It's not town A that just had a bad year and they're running a deficit because COVID hit. It's going to be statewide. There's going to be plenty of bad towns or plenty of situations where there's deficits, not in bad towns, but you know what I mean? They're going to have a negative impact to their financials. But I can't see S&Ps and Moody's really dinging you too much because it's an outlier. And again, you got to put a positive spin on it and try to sell it as best you can. So will it have an effect? It potentially could. But, you try to minimize it by spinning it a little bit more positively. And, we weren't anticipating this, but, we have great reserves and we anticipate next year we're going to rebound and be better than we were in the prior year. So it's all on how you sell it, I think.
So we have Jerry Sineski has asked to talk. You want to let him in? I vote no, but you guys can vote yes.
Good.
So for those of you that don't know Jerry is the current president of GFOA. He's in his first year of his term. It's a 2-year term. Jerry, you're unmuted.
Okay. I'll start with the, I got 2 issues. Actually, I forgot about the one. John reminded me.
Actually, if you'll hold that one, Jerry, about your analyst, if you can hold it till when we talk about legislation, that'd be great.
Okay.
I'll bring you back in.
Right. On the Moody's and Standard & Poor's, we're in line for a sewer plant in down Township that's being run through the county because of the rating that we have compared to a very, very small town. We're running it through the iBank. The iBank has taken it upon themselves to do, because of COVID, to do a credit analysis. So I received on their side it's a single-page request, but an incredible amount of data is going to take a couple of weeks to put together, doing trend analysis. But with the revenue shortfalls and everything else, here we sit in May, and I've got to make assumptions for whether these laws are going to pass or not pass, whether all these taxes are going to happen, not happen. If we're doing a rating on a normal situation, it's fine. but it's just frustrating to ourselves. We're going to table the ordinance and maybe not do the project. So while Standards & Poor's and Moody's have yet to take action, the state of New Jersey through the IBAG has taken on themselves to try to make sure that there's not deficits that they should worry about. So I'm just telling you, I mean, we had a conference call. Apparently the bond council group are fighting them about it. This could just stop the project because I'm not, doing a test that I'm going to fail. So there is, and then what does that do to my credit rating? And do I need to disclose that in EMA if I have a bad credit opinion from the iBank? So there are complications out there.
Okay, thank you, Jerry.
Okay.
I'm going to mute you. I'll bring you back in when we talk about the other one.
Yeah.
Oops.
The other one's much more.
I killed him too soon. Sorry, Jerry. Although that's nice to have that control.
Yeah.
Bring you back. You can complain later. We have any more on this subject? Are we good? We'll move along then. We'll move along to revenue.
Yeah.
So one of the questions we received, the last one, is do you have any strategies to address revenue loss during the pandemic or as a result of the pandemic?
So I think we'll throw that over to the panel if there's any thoughts that you guys have.
Well, we've already addressed a lot of the issues, whether it's your reminder notices need to go out or benchmarking where you're at from the prior years. I don't want to get this too redundant, and I know we have a lot of topics to get through still in a short period of time here. So, we've discussed a lot of these, and I'll just rehash them as like the reminder notices. The backlog in court, no new tickets, but you can still catch up on old cases. So you got to look at all of the angles here. Look at the timing of the tax sale to increase cash collected. There's a negative aspect to doing that you're not collecting as much in delinquent taxes, but to move that up, you'd be doing better in revenue if you had your tax sale sooner. So there's different things, there's different areas that you can address when it comes to revenue, but we've kind of gone over them at this point. I don't know if Ray or Mon want to join in as well on this one.
I just think, and I think actually when we were talking, John, you had brought it up, but ensuring that your fee schedules are up to date is something that's important. If you have an out-of-date fee schedule and it's something that you could update to ensure you're collecting what you should be in for 2020's value. So going through that process and ensuring that your fee schedule is not from 1983 is definitely something that could help you with your revenues as things start to come back online and permits are starting to be issued and all that. Making sure you have an updated fee schedule is something that could help with your revenues.
Yeah, and then reviewing your collection system, whether you have the wide accessibility like some online payment system have. So a lot of schools, a lot of towns already have the online payment option for all the residents for taxes or utilities. Some don't, but I want to think about extending it to other fees. So I don't know if, between John and Jason, you have these options in your towns for other payments.
So we'll go through this kind of quick because we are running a little short on time. There's obviously a lot of us are already doing online payment options. Some of the other things that we started looking at, especially when you're dealing with things like a pool, and we have a municipal par 3 course in Millburn. So, and as we start to open up and maybe start letting people back in soon for all of us, is there different ways for contactless payments in person? So things like, we're looking at, I'm not sure I'm totally there yet because I'm a fan, but things like PayPal and Square that allow for apps. So as you're going to a golf course or a pool or even to the tax office, maybe there's a way to pay through PayPal. PayPal actually has a whole credit card option, which includes apps for tap and swipe, plus the app on the phone, plus actually a way for in-person point of sale. So there's some different things that we're trying to look at to see if we can make it all who are going to use the facilities, but also for the employees to kind of keep a little bit more separation. So there's definitely some things to look at that in most cases the rest of the world does, but government, we don't. We're should be a little bit more conservative, but you know, probably time to start thinking a little bit differently than we have in the past.
Agreed. All right, I think we should move on to expenditures then. You know, I think we've said this before, that most of this event has been a revenue starvation problem, not an expense problem. Although we're all buying masks, gloves, all kinds of PPE. But one of the things that we're looking at now is, as we get ready to return back to normal, we need to create a safe working environment for our employees. We need to prep for that return. I know that we've met with a local glass company, and we're installing essentially teller windows in every one of the offices, because they all have their own. We don't have a central collection area, so they can interact with the public safely when they come back. It's when you open those doors, are you ready? So I think PPE has been the biggest expenditure that we've been dealing with. And I think back to Fabiana's question that was put up there. She said that she's been tracking all of her COVID expenses in her finance system with a tracking ID, which is going to make it easier for her to report and collect that data later on. I know we're doing the same thing here. I don't know if anybody else wants to weigh in with how they're collecting or preparing for that, or the expenses that they're incurring as a result of this.
From my standpoint, we're using the tracking ID system. Most of our software vendors have a way to do that. I'm probably the wrong person to talk about how it'll between CARES and FEMA, but I think the better prepared we are to track to submit our expenses, the better it'll be at the end once we have a little bit more understanding about how the reimbursements are going to come in.
Right, and I was going to address some of the not the CARES, but a new one that's coming out when I talk about legislation a little bit, so we can talk about some of the options that are available. Anybody else on expenses? And like I said, this is more of a revenue starvation than it is anything else. So Michaela, if you could put up polling question number 3. So we're looking for here is, do you have a formal plan that you've created for returning your employees back to work? Wow, we've got 30% no. We'll keep it going a little bit until we get to about 90%. Just remember, this is how you get your credits. I think we beat the last percentage response. We're doing pretty well here. Up to 95%. We'll keep it up for just another minute. Maybe not a full minute. We're at 97%, so that's 68 of the 70 have voted. Come on, we need 2 more. I feel like I should break out the pom-poms and cheerlead now. All right, they're holding out on us. I think we can end the polling. We'll share those results. Oops, I am not allowed to share them right now. Maybe it's on your screen. So we have 71% said yes. That's 48 out of the 70, or 48 out of the 68 that responded, and 20 said no. My suggestion, if you have not come up with a plan or a policy on how to return people to work, that you should really be focusing on that now. Okay, we're gonna stop the share. Okay. Oh, actually, it says opening to the public, not the employees. I'm sorry, I stand corrected. But still, you should have a plan on how to deal with their return. Okay, moving on to purchasing. Jason, you want to handle this?
So, yeah, I mean, we can go through this. I don't know, and I'd be curious to see if there's any questions or comments. I think the one thing that I just kind of learned from a couple things and watching what was going on in some of these emails that we get is just be careful from a purchasing perspective. Just because somebody's telling you they have PPE masks and can get them, they may not be legit vendors. There could be some price gouging involved in that. So just make sure you're going through the process. I know our first responders, we're going to be looking to do things quick, but sometimes we have to slow them down a little bit to make sure that you're actually buying responsible. That was the term that we came up as we went through that yesterday. I don't know if anybody's seen anything crazy that's happening right now, but I think it's just a good time to kind of really make sure your department heads understand that, we could fall victims to some purchasing scams that are out there. And actually, I think we're going to get to technology a little bit after, but I just got an email from our IT people. Be careful with log me in. I can send an article on later on that we can send out, but there seems to be some scams centered around people logging in through log me in, and some cyber issues around that. So anyway, that's not purchasing, but I just happened to glance down at my email. But I think, and the other part of the purchasing is not just because we're in an emergency situation right now does not mean that everything we're doing is an emergency. So, they can't totally, there's people that are going to want to totally just go out and be able to buy and do whatever they want because we're in an emergency situation. If it's not part of, and if it's, the language I've been using, if not for the COVID-19 emergency, would I be making this purchase? If I answer that question and say, well, yeah, this is something I'd normally do, then it's not part of the emergency situation. So I think it's just important to continue to communicate with the department heads and the purchasing agents to make sure that everybody's on the same page and not just going out and going crazy because of the situation.
So Bill posted a question again, which we always love. He says, is it our responsibility as CFOs to develop a plan to reopen, or should it be the administrative manager or the governing body? I know here in Wharton, we're treating it as a team. We're looking for everybody's input in case somebody forgot something. And I think that's the best approach. So Bill, I guess it depends upon your management team. But I would think as the CFO that you'd want to engage and then find out how you're going to get back to normal. Jason, did you want to talk about the PPE and harder? Do you think it's going to be harder to get once everybody returns to normal?
No, I don't know. We talked about that a little bit yesterday. I think it's already been hard to get in some cases. There's some vendors that will only allow it to be bought through first responders. So right now, Millburn is working with the schools, and we're going to be doing a larger purchase that'll cover the town and the schools as they prepare and try and come up with a reopen plan. So I think as everybody starts to go down this road, it's already hard to get. It's probably going to be that much harder as even, regular businesses are going to go back, that everybody's going to want masks and protective equipment for their employees. So you have to be a little bit proactive right now.
It's going to be like toilet paper buying was.
Yeah.
I think everybody's going to scramble to get it, and I think there's going to be another shortage. So not that we want to encourage people stocking up, but I think you should plan appropriately for that return and the challenge of continuing to get your PPE. All right, let's move on then, if there's no other questions. And then I'm going to let Jerry Snitsky back in a second, but from a legislative activity standpoint, we talked last couple of these roundtables about Assembly Bill 3971, commonly referred to as the CARB bond. That passed the Assembly. It was not unanimous. There was a party line split on that for the most part. There was 3 prime sponsors on that bill, and then we had one Republican that was added as a 4th prime, which I think was a good signal across the aisle. We now have Senate Bill 2475, which is the exact same as the 3971 as amended. We're getting some resistance with that one. I know the Senate President himself has said that he is not a fan of the bill. He would consider allowing it to move forward if he provided 2 conditions, and we're seeking some clarification on this. But the one condition was that the town, in order to use this, had to have at least 10 shared service agreements under their belt. Now, where that number came from and what that actually means, I have no idea. The other one is he said that he would also consider it if all the financing happened through the counties as a pooled financing program. Now, we all know that everybody on this webinar now is going to react to this thing differently. Some may need it, some may not. Some may need one issue, some might need 3 issues to get to it. So I think there's going to be a lot of pressure on the counties. Instead of doing a timed pooled program once, they're going to need to do almost monthly issuance to deal with the shortfalls that are going to happen. We're just going to put a lot of pressure on it. By going through the improvement authority, it may actually increase your cost to issue. So there's a lot more going on. So with that, I'm going to allow Jerry to talk. Let me just unmute you, Jerry.
All right.
You're unmuted.
So am I in? Can you hear me?
You're in, Jerry.
We can hear you.
Okay.
Jerry and I had a conversation last week about a rating that he went through, or an analyst that was talking to him. So I thought that was beneficial for this, because we keep hearing that this is a bad thing, these CARB bonds. So Jerry, you want to weigh in?
Yes, I will. Before I get to that, though, the comment the governor made about 10 minutes of comments on the state budget, and commented about the closed-minded leadership in the Senate. So he didn't specifically say the Senate president, but that's the leadership. Part of the resistance there is the governor is pushing for his own bill to borrow money to cover their deficit. So this is, ours is kind of caught up in the middle, and this is kind of ugly. All right, back to the good news. The analyst, I had a cold call last week from an analyst from Fidelity Investments. Fidelity Investments holds about half of the bonds we have outstanding. So they're holding about $30 million. She's doing her due diligence and making sure we're okay. So she calls. So we're talking about, our cash position, our availability of resources, on and on and on. The good news is she had already heard about the CARB proposal and was very interested in it. As I talked to her, she thought it was an absolutely tremendous idea. She had talked to a couple other analysts at Fidelity Investments, and asked me if I can get her in touch with the Senate president, because they would love to give their opinion. Unfortunately, she wouldn't go public with her opinion. I asked a press release or whatever, but it was all positive. Their concern is access to cash resources. They really could care less about our revenues going down or our fund balance or whatever. The ability to borrow money to cover that deficit, they looked at as an incredible positive option for the municipalities. It was all good news, all good stuff for her.
Okay. Thank you, Jerry.
Okay.
I'm gonna mute you again.
I'm sure you are.
So, John, we got one question from Bill, and I think it's an interesting question, and it's good that you muted Jerry, because he's going to be jumping out of his seat to answer it. My staff is nervous about handling paper. How can we avoid vendor signatures on vouchers during this time period? So, was it 2 years ago, I think it was, there was the local finance notice about the waiving of vendor signatures. So I don't remember the number off the top of my head, but it'd be a good time to go back and review the local finance notice on the waiving of vendor signatures and electronic payments. We've been doing it now for 2 years, and it's definitely helpful. As long as your controls are in place, we can avoid some of the extra mailing and extra touching of paper right now, because I don't think it's just your staff, Bill. I think there's a lot of people in that same boat.
It's the same local finance as the one on electronic payment. So it's like 2018-13.
Yeah, that sounds right. Thanks, Mom.
Welcome.
We've been doing the same thing here. It cut down on all our mailings, postage, buying envelopes. It was just a huge efficiency jump. So I just want to, the working group that's been working on 3971 and 2475 has been a group of professionals, bond attorneys, financial advisors. We've also had Jerry Sineski was heavily involved, Chuck Kucha, who I believe is still on here listening, Tom Rochelle and Joe Lupino, and I'm probably missing a couple people, but we've been very active with this. I feel more like a lobbyist lately than I do a CFO, but we've been getting out the word, and I think it's making an impact. Now it's just getting through those last couple of hurdles. Interestingly enough, everybody I've talked to, there's a concern about towns taking advantage of this in an inappropriate way. So that the last couple ones and the hurdles, especially in the Senate, is they're looking for ways to put controls on how we borrow this money so that we don't take advantage of it. My response is, I don't know, well, maybe there's one I know of, but I don't know of many towns that are looking to increase their debt to finance operating costs. I think that's something that as CFOs that we all are not happy with, but it's a necessary evil in these times. But I think the next step that we're going to see on that is whether or not they do it through the legislation or through the regulations to set these up, but there's going to be some extra handcuffs on this one. You know, one of the suggestions that we had early on is that if you take advantage of these car bonds, that you cannot improve your cash fund balance position any greater than it was at the end of 2019. Seemed like a logical metric to follow. So there is one new one I just got today. It's federal legislation. It's S3752. It's referred to as the SMART Act, and it is being put forward by Menendez, Cassidy, Hyde-Smith, Collins, Anchin, and Booker. And what the bill will essentially do is it removes that qualifying population threshold for us to get the money, as was the case with the COVID-19 monies. Instead, it would authorize every state, county, and municipality in the country to apply directly for funding to address the anticipated staggering loss of revenues caused by the COVID event. So this is what we've been looking for. And we also said that if this came through, it would extinguish what we do if we issue any money with the car bond. I think from the beginning, we were looking for a set of tools to allow us to just survive the event and get through it without having major impact on our operations. But from a legislation standpoint, I think we're making some headway with those two bills, A 3971 and Senate Bill 2475. I don't know if anybody else wants to talk about anything else. I know we're bumping right up against that limit. It's 1150, so we actually hit it right on the head. We have a question from Bill. Would we need a supplemental debt statement prepared to borrow the money, and would the debt appear on our annual debt statement? Debt is debt, Bill. It's not free debt, so my guess is yes, it would be an impact on your debt statement. You have to issue a supplemental. You know, the benefit of issuing it as debt, though, is it's an exception to the levy cap.
Yes.
When you pay that back. You know, some of the other things that we're coming up to is if you issue this debt and you happen to do it in 2020 and you get to 21 and your taxes then catch up, you can extinguish that debt. You just use it as a short-term financing tool to bridge between what happened and where you end up. Jerry is chiming in that it does require an ordinance. It would be a refunding ordinance. The way CARBS is written, it's the refunding ordinance. There's another measure being pushed by some other people to change the special emergency language to allow up to 7 years to do it. That's a restriction. I know some of the pushback on the two bills that we have now in New Jersey is that it allows us to issue for up to 20 years. First 10 years without approval. Anything after 10 years, you have to go before a local finance board to justify why you're looking for that amount. Anybody else? Any of our attendees want to ask some questions? Raise your hand, type a question. Give them a second to respond. I don't see any hands going up. John, did you want to wrap it up?
You have another polling question?
Oh, I'm sorry. You woke me up. Yes, we need the final polling question. Thank you. We're at 84%. We need a couple more people. Oh, well, we do have a hand up. So we'll wait for the poll to end and then we'll respond to Joe. All right, we're at 92% have voted. Come on, last time we made it to 68 people out of 70. All right, so I'm gonna share results. We have 6 people that say that they would take advantage of it or would need to, and we have 59 that said no. So again, it's a tool that if you need it, it's there. That's assuming that they can get this thing pushed through. I do know of one town, and I will not call them out, where the mayor was excited about this, was calling all of her legislators to push it forward. And finally then came back and met with the CFO and says, all right, I want to reduce taxes and take advantage of this. It's a little crazy. So I guess some of the suspected abuse does exist out there. So with that, I'm going to allow Joe to talk.
Sure.
Yeah, no one wants me to talk. No one wants me to talk.
Hey, let's mute him.
I will apologize in advance. I'm working from home today, so you're going to hear a little voice in the background with my daughter. I got to ask a couple questions. Up in Bergen County has announced that. Okay, you know what? I'm going to not be able to ask my questions. My daughter has an issue that is way more important than what I'm going to ask. I'll email everybody.
Smart man,
Good job.
smart man. Knows where his priorities are.
All right. Anybody else out there have a question? Wrap that up.
Yeah, I'll wrap it up. Let's first of all, thank you all for on behalf of all of us at Nisivoccia. Thanks for coming on with us today. Hopefully, we'll be able to do this in person before too long, but we do appreciate everybody joining us today right before the holiday. And big thanks to Bill Homa for asking at least 30 of the 34 questions that we had. It's great to have group participation, and we do appreciate it. So I just wanted to say thank you. I hope everybody is safe this Memorial Day weekend. And, you know, when it comes to these, if you have any topics that you'd like to hear more about or what we can do differently, please let us know. We're always open to feedback and suggestions. So we look forward to that. And kudos to everybody who helped put this together. John, Jason, my people at Nisivoccia, Michaela and Laura. Great job by everybody. Thanks to the panelists. And again, thank you all the attendees for coming on and sharing a little bit of time with us today. So be well and God bless.
Have a great weekend, everyone.
Have a great weekend.
Have a good weekend.